How can Toronto address its housing crisis with innovative multifamily developments? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In today's episode, we're diving into how the St. George is leading the way in tackling Toronto's housing affordability crisis. According to an article by CoStar, the St. George is an affordable rental housing project located at 321 St. George Street in Toronto's vibrant annex neighborhood. Developed by Green Street Flats, this project has transformed a modest single-family home into a 22-bedroom, 9-unit multiplex, which includes a garden suite. It serves as a shining example of what can be done to fill the so-called missing middle housing in Canada's largest city. The development was recognized with the 2025 CoStar Impact Award for Multifamily Development of the Year in Toronto, thanks to its innovative approach to adding residential density while maintaining affordability. The project required navigating a challenging zoning and approval process, which involved 7 variances and a committee of adjustment hearing. Despite these hurdles, Green Street Flats extended the main building to 21.8 meters in depth, surpassing the permitted limit of 17 meters, to deliver 9 rental units that cater to a diverse range of tenants, from families to young professionals and students. Located on a bike path and just a 5-minute walk from DuPont subway station, the St. George offers residents easy access to Toronto's transit network. This combination of sustainability, accessibility, and convenience makes it an ideal location for people wanting to live in one of Toronto's most walkable areas. The development features a mix of 4-bedroom, 2-bedroom, and 1-bedroom units, reflecting its commitment to serving the varying needs of the community. Leonid Kotov, president of Green Street Flats, says this project exemplifies the future of multifamily housing development in Toronto, where smaller, more sustainable, and community-oriented residences provide a viable solution to the city's affordability crisis. Judges from the CoStar Impact Awards praised the project for delivering affordable units in a supply-constrained environment and for making effective use of Toronto's transit infrastructure to avoid further urban sprawl. The St. George's design and integration of outdoor space have been noted as complementary to the needs of its residents. As Alana Kantkier, National Vice President of Retail Leasing with JLL, mentioned, the development's affordability and availability have a strong impact by responding to the needs of the community. The project represents a significant step forward in addressing Toronto's housing challenges and offers a model for other cities facing similar issues. In a strategic move poised to capitalize on the robust commercial real estate market in the United States, a proposed Canadian real estate investment trust is seeking to go public with a significant portfolio of luxury multifamily units located in New York City. According to CoStar News, the Toronto-listed Real Estate Investment Trust has assembled a portfolio comprising over 2,000 apartments, valued at billions of United States dollars, as it anticipates growing demand in America's largest commercial real estate market. This ambitious endeavor by the Canadian Apartment Real Estate Investment Trust, known as GO Residential Real Estate Investment Trust, marks a significant step in international real estate investment strategies. The trust's portfolio includes some of New York City's most prestigious luxury apartments, underscoring its commitment to high-end residential offerings. This move reflects a broader trend of Canadian investors expanding their reach into the United States market, particularly in cities like New York, where demand for luxury living continues to rise. The portfolio features notable properties such as the Copper at 626 First Avenue and 1 Sutton Place North at 426 First Street, among others. These buildings are renowned for their prime locations and luxury amenities, which appeal to a diverse tenant base seeking upscale living in New York City. This strategic positioning aligns with the Real Estate Investment Trust's vision to cater to sophisticated tenants and leverage the city's vibrant real estate landscape. GO Residential Real Estate Investment Trust's initial public offering is expected to attract considerable attention from investors, given the allure of New York City's real estate market and the trust's strategic asset selection. The Real Estate Investment Trust's leadership, under the guidance of Chief Executive Officer Joshua Gottlieb, is optimistic about the potential for growth and returns, citing the increasing demand for luxury apartments in key urban centers like New York City. This move not only highlights the strength of Canadian investment in international markets, but also signals confidence in the continued growth of the luxury multifamily sector. As the Real Estate Investment Trust prepares to go public, it presents an exciting opportunity for investors looking to participate in the thriving real estate markets of both Canada and the United States. The success of this venture could pave the way for more cross-border investments and collaborations in the future, further strengthening ties between these neighboring markets. In a recent development that's catching the attention of the multifamily real estate sector, M&T Realty Capital Corporation has lent $76 million for hotel-to-multifamily conversion projects, as reported by Andrew Cohen. This move highlights a growing trend in the real estate market where underutilized hotel properties are being transformed into multifamily housing to meet the increasing demand for rental units across the United States. The loan provided by M&T Realty Capital will refinance existing first-lien debt and preferred equity for a portfolio that includes 886 units spread across 4 states: Detroit, Michigan, Fayetteville, North Carolina, Groton, Connecticut, and Warwick, Rhode Island. This funding will help complete the lease-up process, enabling these properties to stabilize and eventually transition to permanent financing. Robert Barry, Senior Vice President at M&T Realty Capital, explained that the bridge loan is designed to support the stabilization of multifamily assets, especially those benefiting from local tax abatements. This aligns with the goals of Good Homes Communities and their investment partner, Pilot Real Estate Group, who have been actively converting hotels into multifamily units over the past 5 years. According to Adam Feldman, managing partner at Good Homes, the mission is to breathe new life into underutilized properties and provide high-quality, affordable housing for working families. This financing is a crucial step in their strategy to expand affordable housing opportunities in communities that need it most. Steve McGuire, head of bridge lending at M&T Realty Capital, noted that there's significant potential for additional hotel-to-multifamily conversions, given the high demand for rental housing nationwide. Good Homes is seen as a leader in this space, with a proven track record of successful conversions and a clear vision for future projects. The Good Homes portfolio, including properties like Good Homes Cedar Creek and Good Homes Bordeaux in Fayetteville, showcases the potential of repurposing extended stay hotel sites for multifamily use. By leveraging moderate leverage loans, M&T Realty Capital is supporting sponsors in achieving their business goals while contributing to the broader effort of addressing housing shortages. This initiative exemplifies the innovative approaches being adopted in the multifamily real estate sector to tackle housing challenges. It also reflects a positive outlook for the future of affordable housing, as more investors and developers recognize the value of converting existing structures to meet community needs. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.